Welcome to this episode number 88 of Your Next Trade, called today Stargate versus Deepseek. Last weekend, we looked at what were the catalysts going into this new week, and most of the expectations were around Trump. Why? Because on Monday, that was the inauguration of the Trump administration, and on Wednesday, what happened very quickly is there were tons of announcements, and one of the announcements was a big investment in artificial intelligence in the US of 500 billion, so half a trillion. That was done by those four people mostly. We are talking from the left-hand side, the SoftBank CEO, then the Oracle CEO, then Trump, and finally the OpenAI CEO. So overall, what were the announcement made, which was, mostly that they will be putting 500 billion into new investment for AI. And in the meantime, Musk, like 2 minutes later, said, no, guys, they don't have the money. If they can be putting 20 billions, this is probably the best that they can do. If you've been trading the market for more than a few months, what you will know is SoftBank CEO is known for pushing the assets like there is no tomorrow. If you think about 2020, 2021, there was the story about, he was running a book on YOLO calls, buying tons of calls on some tech names and pushing the names much, much higher. So going forward, we do have some questions about Stargate, and we have questions about AI versus the new project that is coming from China, which is Deepseek. So over the last few days, there has been a ton of noise around Deepseek, which is AI running from China. They have been saying that the costs have been very, very low with China. Take a pinch of salt, because at the end of the day, we do know that they have been massively investing into AI. But what does it tell us? It tells us that for the US companies that have been investing massively into AI, meaning that, it's mostly about CapEx now and expecting huge net income going forward, huge cash flows, that means that there will be some competition. So we should expect maybe some pressure coming out of those names, because competition from China and from some other part of the world will be coming soon. So what about the week-to-date asset performance? Starting with the blue one, which has been stocks. They have been very, very strong. We are talking almost 2% for US stocks. So there has been a risk on. Second part of this chart has been weakening of the US dollar. So US dollar roughly down 2% versus most currencies. So far before that, dollar was really, really strong. We had some decent macro data for Europe, and China was okay as well. So that explained a bit of the outperformance of those currencies, but mostly it was an extreme positioning. If you look at the CTAs and if you look at the commitment of traders, we had a very extreme positioning for the US dollar. And as always, when the positioning is a bit one-way sided, then you could have a reversal, and this is what we had for the week. So if you look at the week-to-date industry performance now, as you can see, the S&P is here. So the plus and the minus, we are in the middle. So kind of broadening of the performance of the names that did pretty well. Left-hand side, it's mostly oil services, energy, and solar. Why? Because we are talking about Trump, who is very keen and putting pressure on OPEC to be pumping more. So we've seen some underperformance of the oil sectors. Other end of the spectrum, as we're going to see now with the sector's performance, healthcare has been very strong. So 3%, telco up 3% as well. But energy, the only loser for the week. And overall, that has been an okay market. IT 2.2%, S&P 1.7%. So what about the rates now? Looking at where is the 10 years at 4.62% for the US 10 years. We went not so long ago at 4.8%, coming down a bit, but we can't really go much lower than that as long as we get loads of bond supply coming into the market and we are running a big deficit. So going forward, looking at the FOMC meeting on Wednesday, what are the expectations? The Fed is not going to be cutting now. It's not going to be cutting on Wednesday. This is what the market is pricing. We are still pricing almost 2 cuts for 2025, so not as aggressive as it was not so long ago, as you can see from the red line going up to the blue line, meaning that the Fed is not seen as dovish, as accommodative as it was not so long ago. So FOMC meeting on Wednesday, that's going to be very interesting. The VIX now with the volatility, so below 15% for the 30 days. If you look at the last of the 9 days, we are 13%. So interestingly, so far we have been following the path of 2017 with volatility getting depressed. I think going forward, so far what we saw is the volatility has been smashed going into big events. This is the same with earnings, where actually implied volatility has been lower than recent earnings season. So one of the plays for me has been to go long implied volatility going into these events, but because we could see both on the SPY level, I'm talking the S&P 500, and on single names, some bigger moves that what the implied move is saying. So let's go into the technical analysis, starting with the S&P 500. You see that the 6120 on the futures has been broken on the way up, but we see as well that the volumes are coming down, and as well that the RSI is a bit toppish. So what I've been doing most recently, that was on Wednesday actually, I've been buying some put spread into March, 5 to 8% out of the money. They're offering a 9-to-1 risk reward, so very good risk reward. You should be look at it. Those are the positions that I've been starting to put. I want to be looking at CL1, so there has been a bit of a fake move that we discussed last week, that we wanted to look if there was any follow-up in the oil market, and so far nothing. Why? Because Trump has been again very vocal in saying OPEC oil should be coming down. Euro dollar, strong move from the euro from 103 to 105 on the week, so really big bounce. I want to be now looking at Meta on the single name. Why? Because around midweek, Wednesday, Thursday, we get tons of earnings coming from the US, and one of them is Meta. So we had an interesting question on the Discord community saying, what should I be doing? I do have a big position on Meta. I do have like a big position on my portfolio. What about the Fed is not going according to my plan? What about Meta is not going according to my plan? So there are many ways to look at it. You should be starting with looking at the option market and what the option market is pricing. Then you look at your gross and your net exposure. If it's not good enough, and you think that you get too much net exposure, then you are probably going to be suffering if the market is not going your way. So all those things, it's pretty easy to do. We learn it through the 4x4 video series. We have a new mentor that just joined the team and is now doing mentoring programs. So those are the things that we should be learning, that you'll be learning with us through the mentoring program. So what happened for this week? As we said, we started with some Stargate. So big move on Stargate. And here I want to be looking at ARM. So ARM is a semiconductor which is 90% owned by SoftBank. So the float is very, very small. And as always with SoftBank, there is a bit of questioning of, are they pushing their position? How are they pushing their position? They make a lot of noise. And as you can see here, if you look at this chart here, you see the total volume calls that went massively up on Wednesday and Thursday, where the stock went from 160 to 180. So there is a pump and dump from all those names. So as always, we want to be looking at how the option market is doing, what are the different strikes, what are the open interests on any single day and any single maturity. Then if you look at the S&P, it's a bit of same as usual. We go up, up, and up, and up. So step by step, we carry on going higher. Then as well, what I want to discuss is this earnings season. So earnings season, so in blue here, you have the bit from the EPS for the S&P 500. We are talking very similar to what we had between 2 and 5 quarters ago. So we are beating, sales are barely beating. So it's mostly about EPS beating better, and the price reaction has been pretty good so far, with actually communication real estate and utilities doing very, very well. So those three sectors, we are talking two of them that have been about yields, but as well, if you think about utilities, the push is about new energy that is needed from artificial intelligence, and that has been the push. And then we had two big moves. We had Europe outperforming the overall market, both in terms of Europe being outperforming, but as well the indexes. We are talking the Stoxx 50, the Stoxx 600 that has been outperforming the US. That's something we haven't not seen for quite a long time, and we want to flag. And finally, as I said, the US dollar weakness. So for the catalyst going into this week, we got tons of them. We get the Chinese PMI, so that will be from Sunday evening to Monday morning overnight, and on Monday after the close we get Chinese New Year. So don't expect that much news coming from China. We have as well a lot of central banks. So the first big one is obviously the FOMC rate decision on Wednesday. The last two moves on FOMC have been pretty big. We are talking 2.5 to 3%. So an absolute move of more than 2.5% for the last two moves versus the SPY. What is the option market pricing for this week? For the next 5 days is plus minus 1.3% versus last two on the day on Wednesday of 2.5%. So when I've been telling you that implied volatility have been pretty smashed recently, those are the trades that I want to be looking at because I think they offer great returns coming into these events. We are talking not only macro, but as well if you look at the earnings season, mostly with Tesla, Meta. So Tesla market is expecting 7% implied move, same with Meta. So if you think about it, those are not big moves versus what has been happening most recently. But what we can see, we get the FOMC on Wednesday, and just after we get those three big guys, Tesla, Meta, Microsoft, and the day after we get Intel, we get Apple, we get Visa. So very busy week for earnings. We have as well macro with GDP on Thursday, so this is for Q4, and the PCE. So earnings, central banks, end of the month, because we have on Friday the end of the month. So we could expect funny moves in the last hour of the trading. And as well, we have Trump. So Trump is going to be talking a lot. He's going to be making some announcement every single day about new project in the US, tariffs, and that is market mover. So far, market has been pricing only good news because I think Trump has been dialing down the theme of tariffs, but very soon we will have some headlines hitting the tape. So macro with China PMIs, we have as well the red decision from the FOMC, the Bank of Canada on Wednesday, and the ECB on Thursday. We got tons of earnings, so this one is the big one, as we said, with Tesla, Meta, Microsoft, Intel, Apple, Visa, and some more. So for the week, this is it. If you are interested in the mentoring in the 4x4, please send us an email at Greg@Dupont Trading. We just enrolled a new mentor who is now doing mentoring. So we are doing alpha mentoring with me, alpha mentoring with Etienne. We have just been putting more and more people. We just booked 2 people over the last week, and we have capacity to do a bit more with Etienne. So feel free to reach. We got the trading community on Discord. I've been a bit busy these days, but we are still planning on launching the paywall, and it's going to be for the next few weeks. So this is it for me for the week. Have a good trading week. Bye-bye.